Good morning and welcome to the Business Standard Morning Show. I'm Kanishka Gupta and let's have a look at the stories for the day.
What the world needs now is people who see healthcare a little bit differently. Because seeing a healthier world isn't far in the future. We're building it now. GE, building a world that works.
Sri Lanka's economy is in a free fall for a while now. It is hurtling fast towards bankruptcy. Its food inflation has soared to 57% and the nation is left with no reserve to import essentials. This crisis is having a crippling effect on its apparel and famous tea industries also, the mainstays of Sri Lanka's economy. Meanwhile, traders in India are looking to fill the void left by the South Asian neighbor. But some spillover of the Lanka crisis is hurting Indian businesses too, like the auto sector. So, in our next report, we try to gauge the overall effect of the crisis on India.
Sri Lanka is in a crisis. COVID-19 has sent the economy into a tailspin and it is in free fall now. Its Prime Minister Ranil Wickremesinghe recently said that the country's economy has collapsed. The spillover of the crisis has reached Indian shores too. ITC has said that its first foreign venture in the hotel space has been hit. Earlier, the $300 million project in Colombo saw construction being impacted due to the 2019 terror incidents and then the pandemic. In April, a financial daily had reported that automotive firms like Tata Motors, Mahindra & Mahindra, Ashok Leyland and TVS Motors had stopped exports of vehicle kits to Sri Lanka and halted production at their Sri Lankan assembly units due to its precarious forex reserves and fuel shortages. According to an India briefing note by Dazan Shira and Associates, instability in Sri Lanka could affect Indian Oil, Airtel, Taj Hotels, Dabur, Ashok Leyland, Tata Communications, Asian Paints and State Bank of India. Meanwhile, Sri Lanka's share in India's total exports has declined from 2.16% in FY15 to just 1.3% in the first 10 months of FY22. India's exports to Sri Lanka are now nowhere near the $6.7 billion seen in 2014-15. Till January 2022, it stood at $4.49 billion in FY22.
Of course, to some extent, it has impacted, but since India has carved out a line of credit mechanism with Sri Lanka, initially for $500 million for petroleum exports and subsequently $1 billion by SBI, which covered most of the industrial inputs required by Sri Lanka. When I'm looking into the figures so far till the month of April, we have kept the momentum and my first 4 months exports have shown an increase of around 50% plus for export to Sri Lanka. And we're hoping that since now tourism is opening, Sri Lanka will be in a position to manage the balance of payment position.
Prior to the pandemic, India was the top tourism source for Sri Lanka.
I think the immediate impact in the short term will be a disadvantage because a lot of movement that is not able to go internationally to the West or the other markets would have picked Sri Lanka. Not having that, they would definitely choose an Indian destination, but some of the demand is not going to travel at the moment. It would have been a great advantage if Sri Lanka was open. But in the long term, we're going to see some advantage because not only the domestic tourists, but also the inbound tourists, the international inbound, which comes into Sri Lanka, may choose India as an option like Kerala and Tamil Nadu and other destinations or Goa as an immediate alternative.
But there is a silver lining too. Since Sri Lanka has been the world's largest supplier of orthodox tea, calls to Indian planters and exporters from foreign buyers of the commodity are pouring in. Big Sri Lankan importers from Iran, Turkey, Iraq, and Russia are reportedly visiting Kolkata and tea plantations in Assam. As a result, at recent Kolkata auctions, the average price for orthodox leaf saw an increase of up to 41% compared to corresponding sales last year. And the fuel shortage in Lanka is crippling its apparel sector too. According to the US International Trade Administration, the apparel export industry accounts for about 44% of the country's total exports. Many apparel orders from the UK, EU, and Latin American countries are now being diverted to India. Several orders have been given to companies in Tirupur, the hub of the textile industry in Tamil Nadu. Sri Lanka has been a strategically important partner for India. Even as some of our businesses are hit and some try to fill the void created by the Sri Lankan crisis, India's assistance in this time of need will only lead to better ties with the island nation that has long been leaning towards the Chinese camp.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं? ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं? वो तो सबसे आसान है। तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
The trouble in Sri Lankan economy had started with the onset of pandemic. A large number of people who anticipated this crisis had started exploring options to stay afloat. Some even turned to cryptocurrency, which is still unregulated in Sri Lanka. Meanwhile, India too is slowly but firmly moving ahead to regulate it. Recently, it had announced to impose 1% TDS crypto assets. And on Wednesday, the government came out with a detailed clarification to address concerns raised by the industry. So, as the TDS regime is slated to come into effect from 1st of July, will it be smooth sailing for domestic crypto exchanges and traders? Let us find out in the next report.
The troubles for India's crypto industry seem to be never-ending. On February 1st, in the Union Budget, the government decided to impose a 30% tax on income from cryptocurrencies starting from the new financial year and 1% TDS on all crypto transactions starting July 1st. The move, in a way, quelled the uncertainty surrounding the fate of cryptocurrencies in India and suggested that it may not be banned as feared earlier. But by then, cryptocurrencies had already entered the bear market territory. The crash was worsened by the recent collapse of algorithmic stablecoin Terra USD. Now, the oldest and the largest cryptocurrency, Bitcoin, is trading at its lowest level in 18 months after falling 70% from its record highs in November 2021. Globally, crypto exchanges are trimming their costs and laying off hundreds of employees as trading volumes take a major hit. Amid these trying times, Indian exchanges have a reason to cheer. While the government disregarded the demand to lower the TDS rate to 0.01% or 0.05%, the Central Board of Direct Taxes on Wednesday came out with long-awaited clarifications over the applicability of the TDS provisions. It addresses some of the concerns raised by the industry and helps exchanges and traders navigate the burdensome TDS provisions. The 1% TDS is applicable on payments towards cryptocurrencies beyond 10,000 rupees in a financial year or 50,000 rupees a year for specified persons, which includes individuals and HUFs who are required to get their accounts audited.
Where they've also clarified how we are also going to do crypto to crypto transactions, because that was the biggest point of concern. Although it's kind of burdensome for the exchanges to do it, because it's the exchange's liability to execute the whole transactions and convert the whole TDS into INR, and then as well as file quarterly reports, which is kind of good for the whole user experience. Probably it's a weak work for an exchange to set it up. And I think exchanges will actually develop the capability to file the taxations, file the reports and everything on the behalf of users. And this will probably decrease the volumes further, as I'm expecting in the shorter term. But what I see is that people will be mostly holding. Probably what I see is that the industry will actually launch more like long-term investor friendly products. And I think they haven't clarified on the derivatives, like what are we going to do on derivatives, what kind of TDS is going to be deducted and how it's going to be filed, because obviously you have leverage trading, margin trading.
In a peer-to-peer transaction, the buyer is required to deduct the tax before paying the consideration. In case the transaction is taking place through an exchange, the exchange can deduct the TDS. Exchanges are required to furnish a quarterly statement for all such transactions. CBDT also removed doubts on how crypto-to-crypto trades are treated for TDS. In such cases, the exchange will have to deduct 1% TDS on both the assets in the pair. The tax deducted in kind must be immediately converted into either Bitcoin, Ethereum, or stable coins, namely Tether and USD coin. This accumulated balance should then be converted to Indian rupees at midnight every day. The trail of transactions for every TDS deduction on crypto-to-crypto trades must be maintained by the exchange.
Overall, it's a good clarification from the government. This will definitely help exchanges and other participants in the crypto ecosystem to implement the TDS provisions and be and operate in a legally compliant manner. Having said that, there are certain issues that are still unresolved. So one of the first issues is on whether this applies expressly to foreign exchanges or not. Secondly, there are certain products by some of the exchanges which may or may not be covered. There is a little bit of gray area, for example, on P2P transfers over a platform. Separately, one of the issues that has been raised even when the provisions were legislated were with respect to how they apply to decentralized exchanges or DEXs. Enforcement against DEXs is still a big issue. Who do you go after in case of non-compliance is an open question. Of course, the clarifications do not address these aspects because I think they were just intended to address questions raised by several exchanges, primarily domestic exchanges.
Compliance requirements going up for exchanges should provide comfort to banks. They have in many instances denied services to them. BITE's Amanjot Malhotra says it is surprising that banks are still not comfortable doing business with crypto companies despite a taxation regime setting in and regulations evolving for the asset class. He says one will find compliance to be very strong with crypto exchanges in India. It is hoped that the latest clarifications on TDS and the soon to be issued FAQs on crypto taxation will bring a sense of stability to traders and domestic exchanges in a turbulent year.
यार मत पूछ यार, फिर से स्टॉक्स में फंस गया।
तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Like the cryptocurrencies, the shares of housing finance companies have been falling for quite some time now, and most of them nosedived after the RBI hiked repo rate on 4th of May. While analysts believe that robust real estate demand may outweigh rate hike impact, there is a section of firms that may be vulnerable to interest rate hikes. Let us find out more.
Markets have been on a wild ride ever since the Reserve Bank of India announced a surprise rate hike on 4th of May. While the benchmark Nifty 50 index has shed around 9% since then, individual housing finance companies have cracked up to 36%. Investors have shunned housing finance companies, or HFCs, amid fears that a sharp rise in interest rates and higher inflation can dent the housing finance demand in near term. This, in turn, may have a trickle-down effect on the demand for home financing. Yet, analysts believe fundamentally strong HFCs would be able to tide over the rate hike cycle better, even as they partially absorb increased interest rates.
If you look at large housing finance companies like HDFC Limited, LIC Housing, they do have a good brand and a command on the wholesale side as well, so they can borrow very effectively at a very competitive rate and lend to the end borrowers. Secondly, if the rates on the liability side kind of reprice with a lag, because they have some portion of borrowing is fixed in nature, but the most of the asset side, which is the loans which they have given, are floating in nature. So what happens is that as the rate go up, the asset side gets repriced very fast versus the liability side to a certain extent, and that also benefit the housing finance companies.
Home loan rates, which stood at around 6.5% in April 2022, have risen above 7% now. However, analysts believe they are still within comfortable limits, thus protecting buyers' interest. That said, analysts warn that HFCs, which cater to the price-sensitive segment of affordable housing, may see some margin erosion in the short to medium term.
I think this whole retail lending, especially home loan lending, is highly competitive right now. And many of the financial players are also moving away from corporate loans to only retail loans, which is kind of leaving a gap there, but it is intensifying the competition here. And to that extent, I think to maintain the growth momentum, it is kind of possible that some of these HFCs may choose to absorb some of this, which will impact their margins.
Kotak Institutional Equities expects affordable HFCs under their coverage to witness 10 to 70 basis point year-on-year decline in net interest margin in FY23 and further 20 to 100 basis points in FY24. The brokerage said, while there is headroom for increased rates, most affordable HFCs did not pass on the benefit of lower rates to borrowers. Hence, they may be slower in passing on rate hikes. Overall, financials will remain on investor radar in the immediate future, as credit recovery will be keenly watched to gauge the health of the economy. On Friday, Japan's inflation data, US home sales data, and stock-specific action will guide the markets in India.
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है Investing made easy and reporting with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
After Dalal Street, let us now turn our focus to the President's estate in Delhi. The race to Rashtrapati Bhavan has become interesting. NDA's presidential nominee Draupadi Murmu is facing opposition's Yashwant Sinha. She has an edge over Sinha due to the support of a majority in the Electoral College. But how does India elect its president? Our next report tells.
NDA's presidential nominee Draupadi Murmu met Union Home Minister Amit Shah on Thursday. If elected, 64-year-old Murmu will become the first tribal president of the country and the second woman president after Pratibha Patil. President Ramnath Kovind's tenure is coming to an end on July 25, and an election to fill his post will be held before that on July 18. And we will know the name of the new president on July 21 if an election takes place at all. So how is the President of India chosen? Unlike that of MLAs and MPs, it is not a direct election. The President is elected by an electoral college. And who all are the members of this electoral college? They are from Lok Sabha and Rajya Sabha, legislative assemblies of the states and legislative assemblies of the union territories of Delhi and Puducherry. Nominated members to Rajya Sabha and state legislative councils are not part of the electoral college. The votes of electoral college members have a certain larger values. For instance, each MP's vote carries a value of 700. In the case of MLAs, the value of vote is calculated based on the population of each state, and the value differs from one state to another. In highly populated states like Uttar Pradesh, an MLA carries a vote value of 208, while less populated states like Arunachal Pradesh and Sikkim, the value of vote for an MLA is 8. According to the Article 55(2) of the Constitution, every elected member of the Legislative Assembly of a state shall have as many votes as there are multiples of 1,000 in the quotient obtained by dividing the population of the state by the total number of the elected members of the Assembly. To win the presidential election, the candidate has to bag over 50% of the votes. The presidential candidate filing for the nomination has to secure signed approvals from 50 proposers and 50 seconders. The proposers and seconders could be members from the Electoral College.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
In the 2017 election, BJP had managed to get 7,02,044 votes for Ram Nath Kovind. But this time, the NDA's total electoral college votes have come down to 5.26 lakh. That is all for today. We will be back with more news and analysis on our next episode. Stay tuned and thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.